Hi everyone, today let's take a look at what Apple announced at the Worldwide Developers Conference. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Apple announced quite a few things here, the primary being OpenAI is coming to Siri. That's going to be very interesting. That is the main highlight. Siri has been notably quite terrible, and if they can bring ChatGPT into Siri, potentially that could make it a decent competitor to some of its peers. They also announced iOS 18 for the iPhone, as well as for the iPad, as well as the Vision OS 2. So a bunch of different things here, but again, the primary being OpenAI and their partnership with Siri. They're finally getting into the AI race. They've really been notably absent. They've had some partnerships with Google, and now they have a partnership with ChatGPT. And this will allow them to do a lot of things like generate emojis, just like we've been seeing on the Meta platforms already. And this is going to focus on context-driven notifications, writing improvements, image generation, focused content for the user, which should help drive advertising, and then private cloud computing. Moving over to fear and greed, you can see we finished at a 48. We were at a 45 yesterday, so slight step up here over the past couple of days, grinding higher. Markets are still at all-time highs, but we really haven't seen the fear and greed index following that higher. Still regular greed on momentum, still extreme fear here on strength and breadth. Put call ratio and regular greed, but volatility starting to step up there a little bit, kind of interesting. And then greed back on bonds, pretty interesting to see that switch as well. So safe haven demand and junk bond demand both into greed. Moving over to seasonality, you can see sideways choppy market. Monday was supposed to be a slight step up, and we did get that. We'll see if we get the fall into the end of the week like we're supposed to see. It's obviously going to be based on the FOMC and CPI data that we get on Wednesday, but we are supposed to see a slight bearish period here over the next couple days. Moving over to the calendar, you can see that bullish Monday, bearish Tuesday, bearish Thursday, bearish Wednesday, and then slightly bullish here on Thursday and Friday. So we'll see how it plays out. We've been looking for a little bit of bearishness, and so far it really hasn't come through. Moving over to the economic calendar, nothing really here for Monday, just 3-year note auction. Came in a little bit higher than the previous read. New York inflation data, 3.2 is the expectation for 1 year. And then looking at Tuesday, 10-year note auction, pretty much the only thing there. Until we get to Wednesday, this is the big one, CPI, as well as the FOMC decision coming in at 1400. So definitely going to be a big one. Volatility coming in at that 8:30 time period. Expectations for core is a step down by 0.1. Headline year over year is expected to be flat. And then the month over month expected to go higher by 0.1 versus 0.3 on the previous. So that would be quite good as well. Moving over to max pain for the Friday, you can see it's down at 528, still 1% lower from current price. Call wall sitting there at 535. Don't expect to get above that for the Friday session. But look at this put call ratio, super high at 3.5 with 1 million options in the market. Overall, this is telling me there's not a ton of upside, but potentially a few dollars higher. A finish between 528 and 535 makes sense, which should keep us range bound for the week, even if we get a major swing at some point in the midweek. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily, you can see 4 days in a row of sideways choppy action at this level. Got here on Wednesday of last week. Thursday, Friday stayed in the same range. And then similarly here on the Monday, dipped into the pre-market, kind of expected that, some follow through on that down move on Friday. And then we ended up holding that 55 EMA in here, and you can see we finished pretty close to the all-time highs. Not quite there, momentum still not very convincing. RSI slight step higher. The big thing I would mention here is this big volume candle on that last one of the day. To me, that means we could see a little bit more of a swing higher and some more follow through to the upside. In terms of trend resistance, you could be looking here to 543. Again, keep in mind max pain. I don't think we're going to stay at that level if we get there, but it wouldn't shock me if we did see a kind of a big rally here and then a dip low on that FOMC and CPI data. Moving over to the Tasty charts here, you can see we did get a rally. We were right at those levels. Second ATR is at 537.36. That's what we've been grinding along here over the past couple days. It didn't quite make it there, pulled back just short. So 537.30, that's the range that we're looking for tomorrow, and that's going to be a little bit higher once this candle rolls over, potentially in that 538.30 area, so a couple of cents higher. But the interesting thing here is that momentum continues to accelerate to the downside on the volume-weighted MACD as the SPY continues to make this higher high. And then that upper ATR band sitting all the way up at 541.73. Still bullish conditions, slight step higher on that ATR stop, but not a whole lot. And then looking at that 4-hour chart, again, still slight trend higher, didn't hit that second ATR, so same thesis here on the 4-hour chart. That's sitting at 537.14, so again, probably a little bit higher tomorrow, 537.60, 537.70. And then momentum, still bearish here, even though we're holding price action and potentially looking for a slight push higher tomorrow. Moving over to the Qs, same thesis, dipped pre-market, rallied mid-session, pretty much held those levels throughout the day, a little bit stronger, honestly, than the SPY, in my opinion. Hit this trend line, could not get above it, tested it 4 candles in a row pretty much, dipped back to that 55 EMA. So again, still in this consolidation range, 4 days in a row, just like the SPY. Hit that trend line, got some rejection from there. Selling off a little bit after hours, but it's above all the EMAs and SMAs. Momentum doesn't look as bad here, and you can actually argue that the daily momentum looks a little bit better than the SPY, but we're still very close to overbought conditions. Hard to say if this is going to break higher. If it were to, that upper trend is at 472.80 or so, but this trend line here continues to be resistance. That's going to be around 465.50 or so, and you can see I have my notification right there at the high of day from Friday. Didn't hit that today. And we held VWAP pretty much throughout the day. So slightly bullish day, still showing some resistance in this zone. Moving over to the Tasty charts here, you can see we are still in this rally. We're right on top of that second ATR, so again, it does look a little bit more bullish. But again, bearish momentum on that volume-weighted MACD. Upper ATR resistance is at 469.25, so we could see a push to that zone. Again, if we get there, you usually expect a bit of a pullback. Can grind there for a while, but eventually it pulls back, and you give all of that movement away, even in the up grind. So keep that in mind. And then looking at that 4-hour chart, consolidation after hitting that upper ATR. If it pushes to the second upper, that would be 466.38. Still bullish conditions here, but bearish on the momentum. So just being cautious, still holding these positions. Did get back above that 8 EMA at 463.72, which again is a little bit of a bullish indicator. We'll see if we get that push into the 466 area. Moving over to the Russell and the Dow, the Russell actually managed to turn a pretty big profit after getting all the way down to that 199 area. Low of day was 199.01, almost hit my level, 198.75. We were looking for a move there. Still think we might hit this 144 EMA down at 197.79, but that was a big recovery. Pushed right back to my level, 201.88, technically closed above it by 1 penny, and then after hours we're getting a little bit of a bounce there. So Russell, big intraday reversal. Let's see if we can see something more there on the hourly chart. Really, it continued to fall in the pre-market, and look at that. Almost all bull candles in the day, broke above the 21, momentum's bullish, decent volume coming through there, pretty interesting. You've seen moves like this before if you look back to Wednesday, pushed up, hit this upper band, and then still gave all of that back. So I wouldn't say that it's a complete change of trend, but it was pretty interesting to see that big of a reversal on the daily chart. And then the Dow held the level, 387.77, touched that level again and then bounced. Momentum here continues to look better versus that Russell, which continues to roll to the downside in terms of momentum. I also forgot to mention, it was good to see it hold that trend line after a pretty deep test as well. Still think the 144, like I said, is going to be an important level though. Otherwise, Dow, if it continues to push, should push to VWAP 391.20 there, or the 21 EMA right behind it, 391.91. Moving over to stocks that moved here today, we had CrowdStrike and ARM Holdings. Talked about these on the Friday video, but CrowdStrike had another massive move here. 7.29%, big gap and go, hit that next trend line, big volume, bullish momentum. CrowdStrike is getting included in the S&P 500. They are a cybersecurity company who's had a massive run, and this seems to be another continuation here. This is a new all-time high. The high of day was 384.98, and you can see it's up more after hours. If it breaks this trend line, we could see a push up into the 420, 430 area. And then ARM Holdings, decent move here. Still at that resistance, 142.38. If it can break that zone, you got a trend sitting up here at 153.60. Wouldn't quite be an all-time high, and it does seem like it's headed in that direction. Bullish momentum. RSI, it is overbought. It's been quite a run, bottomed out here around 86, and we're back into the 140s, and we're back almost to that 140 area. I do think we could see a push through that next zone, in my opinion. Moving over to Apple and Microsoft, we got Apple here going down 1.91%. That 196.78 area was a zone where we expected some resistance. You can see it here at this previous high. Didn't quite get there in January, but definitely rejected from there in December. Had the event today. Markets were not super convinced. You can see big volume selling coming through. 21 EMA is still support down at 190.95. I would expect that area to hold, but that's a pretty big down candle, something to keep in mind, especially when the rest of markets were positive. Got Microsoft up 0.95, momentum swinging to bullish, RSI breaking out here, so that looks very good as well. Clear move above that SMA. Got the level 429.88. If it breaks this zone, you could see a pretty strong move up to this previous trend, up around 452 or so. Moving over to Google and NVDA, you can see Google is basically flat, slightly positive, 0.39. Momentum, not super convincing, still below the SMA and RSI. Basically held the same range, couldn't get above 179.42, but still holding above those EMAs and SMAs. And then looking at NVIDIA, this is the first day trading with that most recent stock split. Momentum continues to fade here. Ignore this big wick high, that is completely fake. The stock did not move about 60% higher and then sell off. If we look at it here on the hourly chart, basically didn't do anything at all. Hit that trend line one time, still within this consolidation, momentum still fading. So basically a no change day here for NVIDIA. And looking at that candle here, you can see 0.75 on the day with fading momentum. Moving over to Amazon and Meta, both of these had a great day, 1.96% and 1.5%. We liked this setup going into the weekend, and we did get a continuation here. Closed on the highs on both of these. So it looks like Meta's probably headed back into the 520 area, back at this previous high. And then Amazon similarly headed back towards these previous levels. 188.61 is my current resistance. You also have some trend resistance up around that 191.53 area, which would be right in line with this high from 9 May. So probably going to head in that same direction. Both of these look pretty bullish going into tomorrow's session. Moving over to staples and discretionaries. Staples threw a big wick low, still held the level, 77.50. Continues to fade here, momentum and RSI continue to break a little bit bearish. Still looks like a high, lower high setup. We did catch a really strong bounce from that 55, but we couldn't really make a new high, couldn't hit the trend line, couldn't get to my next level. So this looks a little bit weaker here now. And then looking at discretionaries, still in this consolidation, still cannot get above that short-term resistance here at 178.30 or so. And then really have not made it back to that 180.10 level that we've been talking about for a while. So staples looks a little bit bearish, discretionaries looks neutral. Moving over to oil and gas and utilities here, you can see oil and gas did catch a pretty strong bid, 2.13% to the upside, hit that 21 EMA. So we had a big move down, hit the 200, saw that bid here, momentum starting to swing to bullish, a little bit of volume coming in there. Oil and gas sector catching some movement to the upside. Still very much a downtrend, but that's a big candle. Could indicate a little bit more follow through to come. Not huge volume, would like to see some more there. And then utilities. Hit the 70.07 level back on Friday, hit that same level again on Monday, and then caught a pretty strong move, 1.29% to the upside. We'll see if it can get back to the 21 EMA sitting there at 71.59. And then if it can break that level, maybe we're headed back into that 74 range. That's a range that we have not been in for a very long time. You can see we hit it here in September of 22. So see how that plays out. Utilities had a pullback. Seems like we're holding a higher low, potentially could get a swing there. Moving over to oil and copper, you can see oil hit my 73 level back here on Tuesday, bounced really strong on Wednesday, and we've continued that move back into this consolidation. See if it can swing any higher back into the 80s potentially, but that's another strong move here for oil, 0.44 to the upside, 2.93 to the upside on today's candle, and then copper catching a little bit of a bid off of that trend line here, hit it on Friday similarly, and then bounced 1.34% back to my level at 4.54. If this pushes, could look to that 21 EMA there at 4.76. And if we see both of these rallying, that could be a decent indicator for economic activity. And it does seem like both of them have a little bit more follow through in them. Look at this momentum. That's pretty classic. Big dip down, tried to rally, small dip. Now we've had another 2 consistent steps higher. If we get some follow through there, that could be a little bit more momentum in that than it looks, at least in my opinion. Potentially push to that 21 and then maybe even back to these highs around 5.15. Moving over to RIOT and Marathon Holdings, both of these caught a little bit of a bid. RIOT wicked this low back here on Wednesday, and since then we've held consolidation, looked okay. Momentum starting to swing to bullish. The weekly charts on these still look awful, but the daily charts look a little bit better, at least on RIOT. And then looking at Marathon, touched my level to the penny, 1878, touched that level, caught a little bit of a move back to the bull side at around 1%. Again, still doesn't look good. We were in this trend, had a short-term resistance trend, broke down from that level. Could hold this as a little bit of a double bottom here from the 31st and then here again on the 10th. And if it does hold that, maybe we could get a swing off of that, potentially to the upside. But right now, neither of these looks super good in my opinion. Moving over to Breadth, 20-day Breadth, still holding the level at 36.60. We've been there for a couple of days now. We'll see what happens. If this breaks higher, maybe we have a little bit more upside in the cards. Momentum continues to step to bullish. Actually stepped above the RSI there as well, which is pretty solid. So SMA moving down, RSI breaking back above that. You can see something like that here led to a pretty decent up move. We'll see if it follows through here. But that looks better now today. And then 50-day average, not doing anything, completely flat. Momentum continues to be neutral. Again on RSI though, we're still above the SMA, so that's interesting. This doesn't tell me much. 20-day average looks better. Moving over to the dollar, we did get the continuation that we expected off of that move on Friday with the unemployment data. Looked super bullish, got a really strong day that day at 0.81. Got a continuation slightly here, 0.16. But now we're selling off. You can see we got the cross on the hourly chart. That doesn't look great. Momentum says we should catch a bounce. The question is where? Really hard to say. It wouldn't shock me if we saw the dollar kind of sideways consolidate into CPI and into the FOMC. But right now, to me, it looks like the dollar is bullish. We've had a low, solid base here at the 144. We're back above all the EMAs and SMAs on that daily chart. 105.5 is resistance. But if we get above that and start to push to 106, that's going to be quite bearish for markets, in my opinion. Moving over to the 2-year and the 10-year yield, you can see 2-year basically flat, 10-year continuing to rally a little bit more at 0.81 to the upside. 2-year was down 0.12, so 2-year consolidation, 10-year catching a little bit more of a bid, hitting towards that 4.55 area. If this continues to rally, that could be concerning. Again, CPI and the FOMC are obviously going to determine the direction of yields, but right now 10-year looks a little bit bullish. Moving over to JNK and TLT, JNK catching a pretty decent move here, 0.1 to the upside after testing that level again here around that 93.83 area. Touched that level, caught a bounce, ended up positive on the day. Momentum is bearish, RSI is bearish, so mixed signals for sure. Still a consolidation. TLT, big gap down and fell back below this trend line, which is a major breakdown, 0.67 to the downside. Probably going to push down to these trends here around that 89.83 area. Again, waiting for FOMC and CPI, but that's 3 big bearish candles in a row. I do think it'll catch a bid in this zone, probably a higher low setup, and then maybe we can see this start to grind higher, but you do have to watch these kind of moves. Moving over to volatility, move index rallying a little bit, VIX rallying a little bit. Makes sense as we get closer to FOMC and CPI. Volatility in markets probably going to elevate a little bit here. Wouldn't shock me if we push towards that 14.7 area. You could argue low, higher low, which is interesting also. We're right at that 21 EMA, right at the level, 12.75, right on top of it to the penny. Momentum is bullish, RSI breaking back above the SMA here. That's also a higher low setup on RSI, which is interesting. Again, some of that is inherent to FOMC week. Volatility is just going to go higher, but it is a little bit of an indicator we could see some bearishness to come, so something to monitor there on the VIX. Moving over to my accounts, I made about $500 on the day. I really didn't do anything with my positions. Everything that I had held into the weekend, I held here through the Monday. You can see that 462 expired worthless, got all the max profit on that, and then I did sell a 463 for tomorrow for 74 cents, being pretty cautious there, want to stay out of the money on that. And then I sold a call here for tomorrow against my shares at 463 as well for $2 credit, again trying to collect that money there. And then I have a 468 for 8 days from now for $3.50. Pretty far out of the money. Like I said, I think there could be some bearishness and I'm trying to play some defense. As long as markets stay stable, and if we continue to see the markets that we have been with sideways choppy action, those calls should come in profitable as well. Definitely in a better position on my deltas, closer to that 48 area. And then you can see IWM, I rolled out and down to the 201, took off that call and then profited on the way up. We'll see how this plays out tomorrow. Might roll it up to 202. This actually looks pretty good. You can see after hours still hanging in there. Didn't move a whole lot, but it's sitting at almost 202 and I'm at 201. Still have some potential credit left there at $167 profit and a 228 credit. Overall, slightly bullish going into the Tuesday. Let me know down in the comments section what you think of the Apple event. Will they become a major player in the AI era, or will they be left behind like they have been so far? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.